And that's a huge risk for people owning Bitcoin.
What is up, you guys? My name is Dan, and you're watching Bitcoin Reactions, the channel where I react to videos about Bitcoin. I have a very good video that I'm going to be reacting to today. It is from the popular YouTuber, the Plain Bagel, and it is called The Dangers of Bitcoin. So I'm actually a pretty big fan of the Plain Bagel. Richard, the host there, he gives a lot of really good financial advice. That being said, I can already tell just by the title, there's probably going to be a lot of FUD here that I'm going to have to debunk. So, you ready? I'm ready. Let's start.
So I want to make this video to kind of dispel some of the myths around Bitcoin and kind of to challenge some of the arguments for Bitcoin, because I think some of the arguments are irrational. So let's start this whole thing by establishing some common ground that I think most of us can agree on. The first thing being that Bitcoin is high risk. You know, whether you measure risk by volatility or how much the price changes, or risk based on, qualitative things like regulatory risk and things like that, Bitcoin is high risk.
Okay, so right out of the gate, Richard starts off saying that he wants to dispel Bitcoin and challenge some of the arguments for it. That's perfect because I love challenging a lot of the arguments against Bitcoin. So I'm really excited to see what he has to say here. But then he starts off with his first assertion that Bitcoin is high risk, and I can tell you that it is just not. Now, he's right that a lot of people really believe that it's high risk, but that doesn't actually make it true. The entire world thought that the sun revolved around the earth for 1500 years, and it wasn't until Galileo and Copernicus came around that we all began to understand that it was actually the other way around. So at this point, despite a lot of people believing that Bitcoin is high risk, it's just not. Now, don't get me wrong. I'm not saying that there's no risk. Obviously, there's risk with everything in life. But if you understand how Bitcoin works, then you understand that Bitcoin is probably the least risky financial asset in the world right now. So just to give Richard as much leeway as I can here, he did say that his definition of risk was all about volatility and potential regulatory issues. So if that's how he wants to define risk, then yes, obviously Bitcoin is very volatile and there are potential regulatory issues with it, just like there are with everything else. Obviously the regulatory issues with Bitcoin are different, but they're still there. That said, volatility isn't the same thing as risk. Risk refers to the potential for loss. And if you're holding Bitcoin for a long period of time, probably 4 years or longer, then your potential for loss is absolutely minimal. And that's despite all the giant price swings that you see of Bitcoin on a day-to-day basis, or even a year-to-year basis for that point. So again, this video was recorded in 2018. So there was probably more risk in 2018 than there was today. That said, again, at that point, the writing was already on the wall. For everyone that actually understood what was happening, they understood that the risk for Bitcoin was absolutely minimal back then too. So already, it looks like we might already have some issues establishing common ground. That's okay. I really want to see what he says next. So let's check it out.
The second thing that I think we can agree on is that Bitcoin and blockchain are separable. Bitcoin itself is just that token. It's this online currency, and Bitcoin uses blockchain, but blockchain is a methodology. You can think of it as being like a computer, and Bitcoin is like a program. Just because a computer may have value doesn't mean that Bitcoin will have value. And there's no barriers to using blockchain. The Canadian dollar or the US dollar tomorrow could apply blockchain to it. It's not exclusive to Bitcoin.
We are finally making way on establishing some common ground here. Here, Richard's absolutely correct. Bitcoin and blockchain, they're completely separable. Blockchain is just one of many technologies that Satoshi incorporated into Bitcoin. And by itself, it really isn't that special. It's actually one of the bigger tells that somebody doesn't really understand blockchain when they say that blockchain is the innovation and not Bitcoin.
Let's talk about blockchains.
Blockchain is real.
Blockchain has a lot of potential.
People say it all the time too. And it really gives me an ick because most of the time when they're saying it, they're usually trying to sell you some really scammy blockchain type product. But yeah, great job on this point. Let's continue.
The final kind of point of common ground I think that we should agree on is that Bitcoin, or buying Bitcoin, is speculating. The difference between speculating and investing is when you invest, you buy something that's going to pay you dividends. It's going to increase in value over time. And it's typically backed by something of value. Bitcoin doesn't have that. Bitcoin's not backed by anything. Some people argue that's backed by blockchain, but again, they're separable. At the end of the day, it's just a code on the computer.
If I had a nickel for every time I had to explain the difference between speculation and investing. Listen, speculating is all about making short, high-risk bets. And investing is all about putting your money in things that you have a good reason to believe will pay off over the long term. So if anyone is out there day trading Bitcoin, stocks, whatever else, then yeah, I'd call that speculating, because nobody knows what the price of any asset is going to be tomorrow, next week, next year.
But nobody knows if the stock is going to go up, down, sideways, or in fucking circles.
But if you're buying that same asset with the educated opinion that you think it's going to pay off in the long run, then that's investing. It doesn't mean that your investment is going to pay off. Investments go belly up all the time. So investing really just implies that, one, you have a longer time horizon, and two, you have an educated reason for thinking that your investment's going to pay off. That being said, let me tell you, a lot of people, myself included, we've really thought through Bitcoin as an investment, and we're in it for the long term. This is not us trying to make a quick buck here. So for millions of Bitcoiners out there, Bitcoin is and always has been an investment. And then Richard follows it up by saying that Bitcoin isn't backed by anything. And whenever people say that, I'm really not convinced that they've thought through what that means. Because I'll always ask follow-up questions, like, what is gold backed by? And usually they'll say something along the lines of, well, it's used in jewelry and cavities and electronics, so there will always be demand for it. And yeah, that's true, but how in the world does the demand from those industrial usages in any way justify the $2,500 price tag per ounce of gold? It doesn't. And then you can ask something along the lines of, well, what is the dollar backed by? And some people still think it's backed by gold. And that's just not true. It hasn't been backed by gold since 1971. More informed people might say, well, it's backed by the full faith and credit of the United States. And then you have to ask, well, what does that mean? And most of the time they have no idea. Ironically, one of the best answers I ever heard to this question came from Paul Krugman. I actually touched on it in one of my previous videos. And what he said was that the dollar was backed by the fact that people with guns demand that you have to acquire a certain amount every year in order to pay your taxes. But the problem is that that kind of backing only goes so far, because as the government keeps on printing more and more dollars, then the dollars keep on getting easier and easier to come by, and there's no limit to how far in value the dollar can drop. So then you might ask, well, what is Bitcoin backed by? Well, it's backed by the strongest computer network in the world, which guarantees two things. First, it guarantees that there will never be more than 21 million Bitcoin in existence. And second, it guarantees that the Bitcoin network will continue to operate by the same core rules that make it useful to people in the first place as a financial asset. And I guess that answer just doesn't fit well on a bumper sticker or something, because people get confused by it all the time. The entire concept of backed financial assets is actually pretty fascinating, and it really takes you down a lot of wormholes. Maybe I'll do a video about it at some point, but for now, let's move on.
So now if we can agree on these common things, let's get into the more debatable stuff, which are the arguments for Bitcoin. First argument is that Bitcoin is decentralized, which means big institutions can't or won't control it. This one I have some problems with, because the banks will still influence the currency. Because if they have currency and if they have a loan business, they'll be able to influence the value of that currency through interest rates. So banks will still have a bit of control over the currency.
Okay. There's so much I need to respond to here. Let's just start at square one. He's saying that the argument that Bitcoiners make is that Bitcoin is decentralized, so big institutions won't be able to control it. And this is definitely a pro-Bitcoin argument that I myself have probably said a million times. But let me clarify what I mean, because I think Richard's taking this in the completely wrong direction. When I say that Bitcoin can't be controlled by institutions, I mean that the way that Bitcoin operates, specifically its rules, including its monetary policy, neutrality, openness, all of that, that's what big institutions won't be able to control. They just have no ability to do so. And the reason why this is so important is because big institutions always rig the systems to benefit themselves and those with power. Case in point, just look at all the big bank bailouts that are happening all the time. That's just one example of it. Obviously, it goes a lot deeper,
Everybody needs a bailout now and then.
But what Richard shifts to in his argument is explaining that the banks will be able to affect the value of Bitcoin by controlling the interest rates. And let's start by saying that nowhere in the Bitcoin network is there any attempt to try and dictate what the value of Bitcoin should be. That's something that's determined by the market. So this whole thing about banks being able to issue Bitcoin loans at different interest rates, that's just completely irrelevant. They can issue them at whatever rate they want. That's okay. It has no effect on the Bitcoin network. But if we go just one step deeper, this entire scenario looks really nonsensical. And that's because one of the biggest things in Bitcoin is self-custody. Basically, what that means is that you get to hold on to your own Bitcoin and there's no bank required. It's essentially the digital equivalent of storing money under your mattress. Most notably, it means that banks aren't going to have that much ability to be giving out loans in the first place, and that's because they just won't have the same amount of customer deposits to loan money out. Basically, fractional reserve banking, which is what we have now, just gets a lot harder on a Bitcoin standard. And even if they do have some Bitcoin and try and loan it out, the free market is what's going to determine what the rate for those loans will be. Because in this scenario, all of a sudden, banks have to start being really careful about who they lend money to. And that's because if the banks make loans that can't be paid back, then those banks are going to be the ones that are going to suffer the consequences and be shut down. And that's because on a Bitcoin standard, the government has no ability to print more money and bail out the big banks.
Sorry, kid. No bailouts.
So overall here, I think there's just a giant misunderstanding of what Bitcoiners mean when they say that Bitcoin can't be controlled by the big banks or other third-party institutions. And that's what leads to all of Richard's counter arguments being, well, just wrong. Let's move on to the next one.
The other thing is that governments clearly do have control over the use of currency. They might not have control over Bitcoin itself, but they can control who uses it. And that's a huge risk for people owning Bitcoin. And this raises a whole other issue in the fact that, some governments, I don't think will ever accept Bitcoin. I think of the American government, and I find it hard to believe that they would accept something so unregulated.
Okay, so this is another fallacy that trips up so many people. It is extremely difficult, probably impossible, for any government to effectively ban Bitcoin or dictate which people have the ability to use it. Now, I'm not saying that the government can't make it illegal or put a ban on it. That's actually relatively easy, and lots of countries have already done it already. What I'm saying is impossible is for governments to be able to enforce it. And so far, no country has been even remotely successful in doing so. Think about it like this. What's one of the biggest things that governments are always trying to ban? Drugs. But drugs are still everywhere. The market for them is humongous in the United States. They're on the streets, they're in homes. You just can't get drugs out of society. Now think about Bitcoin. Unlike drugs, Bitcoin isn't a physical item. You can send it instantly across the world as easily as an email. You can store it in your head by remembering a simple list of 12 words. There's no physical evidence that can prove that you ever own some. And if you really wanted to, you can even masquerade Bitcoin transactions as emojis or sets of colors on a screen. Think about that for a second. Then tell me how any government is supposed to stop something like that. It's pretty much impossible. Next clip.
Another argument is that Bitcoin is more convenient since it avoids a middleman, but it's not necessarily more convenient than fiat currency. Bitcoin uses almost 4,000 times more electricity than a credit card transaction. And on top of that, the Bitcoin system can only support around 7 transactions a second compared to Visa credit card, which can support 24,000 transactions a second. So the scalability might be an issue here.
Okay, so the argument here is that Bitcoin is more convenient because it avoids the middleman. And then Richard counters it with the fact that Bitcoin uses a lot of electricity and the network is limited to about 7 transactions per second. So first, do I believe that Bitcoin is more convenient because it avoids a middleman? I'll put it like this. Of all the reasons that I have ever championed Bitcoin, I've never included convenience on that list. There's definitely things that Bitcoin is better suited for, like moving money across borders. And if you want to call that convenience, then sure, I guess Bitcoin is more convenient. But in general, I would not say that Bitcoin is the future of money because it's more convenient. In fact, it's probably the opposite. Today, Bitcoin's probably less convenient in a lot of ways than the traditional financial system. But that's okay because convenience really isn't the thing that makes Bitcoin special. What makes it special is the fact that Bitcoin treats everyone equally. It's a completely fair and neutral system. There's a lot of other things that are really important with Bitcoin, but if I had to sum it up into one word, I'd say that neutrality is the reason why Bitcoin is special. But let's discuss its energy usage and scalability because that's what Richard seems to shift to in this section. And the first thing that Richard says is that a Bitcoin transaction uses 4,000 times more energy than a credit card transaction. So let's talk about that. First, comparing the energy use of a credit card transaction and a Bitcoin transaction is comparing apples and oranges. The Bitcoin network is an entire financial system that's designed to be the base layer of value for the entire world. So when we're talking about energy usage, a more fair comparison would be the entire fiat financial system versus the Bitcoin network. And currently the Bitcoin network uses a lot less energy. And 6 years ago, when this video was made, it used even less. And second, he makes a big miscalculation saying that Bitcoin is limited to 7 transactions per second. It's true that the core Bitcoin network is limited to about 7 transactions per second, but the Bitcoin network is a layer 1 technology. This means that it is the base layer for value transfer. Think of it like making an ACH bank transaction. You know, anytime you go to Venmo and you tell them that you want to deposit money into your bank account and they tell you that it could take up to 3 days, that's essentially what a Bitcoin transaction is. The architecture of the Bitcoin network implies that we're going to build layer 2 technologies on top of Bitcoin to help scale and facilitate transactions in the same way that we build layers on top of the banking system like Venmo or credit cards. And here's the cool thing. Bitcoin is an open system. This means that there are no gatekeepers and anybody can build any layer 2 technology on top of Bitcoin that they want for any reason. One of the most popular layer 2 technologies in Bitcoin right now is something called the Lightning Network. And the Lightning Network actually uses a comparable amount of energy per transaction as the Visa network. Also, it can handle millions of transactions per second, which is a lot more than Visa's 7,000. But remember what I said about everybody being able to build their own layer 2? Well, I really mean everybody, even credit card companies like Visa. Credit cards actually play a purpose in today's society, allowing customers to do things like buying things on credit and offering extra security in the form of chargebacks. So it's actually pretty easy to imagine a world where credit cards and Bitcoin coexist. The only difference would be that you would be making credit card payments in Bitcoin instead of dollars. So overall, nothing in this section was really a big concern for me. Bitcoin's core selling point is not convenience. That's probably something that will only happen after a lot of refinement. But overall, I'm really excited to see how the future plays out here. Let's move on.
This is an argument that people love to reference. It makes sense that Bitcoin's price is going up because of limited supply. It is true that if supply is fixed and demand continually increases, that price will go up. It makes sense. But that opens a whole can of worms in terms of Bitcoin's use as a currency. Even if we were to assume that the price will always increase, why would I ever spend a Bitcoin? Fiat currency, whether intentional or not, has inflation, so it encourages people to buy today. But Bitcoin does the opposite.
Okay, so I want to make this response super quick because the answer is actually super simple here. Richard's essentially arguing that nobody will ever want to use Bitcoin as a currency because the value will keep on going up forever. And here's the important nuance about that statement. Yes, the value of Bitcoin will probably rise forever, but the rate at which it rises in value is going to continue to decrease until it eventually plateaus. And that's the point at which people are going to really start feeling comfortable about using it for a currency. Think about it like this. Nobody's going to not spend a few Satoshis on a burrito because they know that that same number of Satoshis is going to probably be able to buy them 2 burritos in 20 or 30 years. That's just not very realistic. So bottom line, Richard has a point that at least in the near term, while Bitcoin's still growing really quickly, not a lot of people are going to want to use it as a currency, but long term, that growth rate will simmer down and eventually no one will have a problem with using it as a currency at all. Let's move on.
Finally, the last argument, and this one's kind of a sore point for some people, is that Bitcoin is not like past bubbles, or it's not a bubble. Bitcoin has many traits of past bubbles. You think of the tulip bulb crisis, for example. It got to the point where a single tulip bulb was being traded for real estate, for a house. Even the tech bubble of 2000 the dot-com crash. There are so many similarities between the two. People were making the same arguments that you can't understand it, things are higher in value because of this new technology, and people were investing in any company that had .com in its name. But then once the valuations were challenged, there was this crash.
This is actually a really interesting point that people talk about all the time. Richard is saying that Bitcoin is a bubble, and he compares it to the Dutch tulip bubble and the 2001 tech bubble. And first, let's describe the difference between those two bubbles, because there was a pretty big one. In the Dutch tulip bubble, when it popped forever. The price of tulips never went back up. In the tech bubble, on the other hand, there was actually a lot of substance there. And while a lot of the companies ended up going out of business, a lot of the big ones just grow to newer heights, and the internet as a whole ended up becoming way more popular and way more useful today than it was back then. So in this sense, Bitcoin is a lot more like the tech bubble because there's a lot of substance. Because yes, Richard's right. Bitcoin does have a tendency to bubble up. It has done so many times, and every time it goes into these crazy manias, and you see a lot of crazy things that quite frankly are just people trying to take advantage of the situation. And that kind of sucks actually, because a lot of people that don't really know any better end up losing a lot of money. But the thing is, despite all of that, there's a lot of substance behind Bitcoin, and that's the reason why even after all of these bubbles pop, they keep on getting bigger over time. And you keep on seeing the price rise to new heights, it seems like every 4 years. So here, I'm actually inclined to agree with Richard. Bitcoin has bubbled many times before. It's going to probably bubble many times again. I think we're probably at the beginning of another bubble right now. And that's okay, because again, with Bitcoin, the substance is real. So in a couple of decades, we're going to be able to look back at all of these bubbles and just appreciate how much Bitcoin has grown over time. So good job, Richard, on this section. Let's continue.
Another common trait between Bitcoin and past bubbles is the fanaticism around it. People who have never invested before are putting all their money in Bitcoin and trading cryptocurrencies on a daily basis. Investing should be done from a rational standpoint, without emotion. And at the end of the day, if you lose money, no one's taking responsibility for that. Think of all the people who bought Bitcoin at $20,000 and where they are today. No one's going to fess up and take responsibility for that. So if you buy Bitcoin, you need to ignore how much it's earned people in the past and look at it from today's standpoint moving forward, because that's all that matters.
Wait, we got to go back to that one section really quick.
Think of all the people who bought Bitcoin at $20,000 and where they are today. No one's going to fess up and take responsibility for that.
Where are all the people that bought at 20K? Hopefully they held, because the price is almost $100,000 today. So if they did, they would have made a lot of money. But let's be real, it's easy to look at those charts in hindsight and take easy swipes at Richard. And I don't really want to do that here, because I actually think he makes a lot of very salient points.
Seriously? Seriously?
I know right now the price of Bitcoin is really high, and it looks like it's about to shoot up a lot further. Probably we're going to be in another mania soon, and I don't know what the price is going to be in 6 months or a year, but probably a lot higher than it is right now. And while that's going to be really fun for all of us Bitcoin holders, seriously, take Richard's advice here. It's actually pretty good. He's saying that it's really important to look at investing from a very logical perspective, and that's because the people that invest with emotion, most of the time they end up getting burned. Because yeah, if you would have bought at $20,000 and held, you would have been doing great right now. But a lot of people didn't do that. A lot of people bought in on the hype. They thought they were going to get rich quick. And when things didn't start to pan out exactly the way that they were hoping, they didn't understand Bitcoin enough to realize that it was going to go up in the future, and they sold low, and people got really financially hurt. Listen, at this point, Bitcoin is not a get-rich-quick scheme. Do I think you should have Bitcoin? Yes, I think everybody should have Bitcoin. I think it's going to go up at a faster rate than almost every other asset out there. But more importantly, I think that you should learn about Bitcoin and understand it. That's the entire reason why I have this channel. Because this is one of those situations where the more you understand Bitcoin, the more likely you are to be successful investing in it. And that's not because understanding Bitcoin is going to make the price go any higher. It's because the more you understand Bitcoin, the less likely you are to sell it in the bear market, which will inevitably happen. I want you all to be very prosperous with Bitcoin. And all you need to do is to hold it for a long time. It's really simple, but if you don't understand it, there's a good chance that you're going to get scared at some point and sell. So if you're watching this video and you're getting ready to YOLO into Bitcoin, thinking that it's going to make you rich really quick, don't get me wrong, there's a chance that you could double or triple your money really quickly, but you're really playing with fire. And there's a good chance you're going to get burned. So I actually really agree with Richard here. I think he did a great job articulating his points. And he's right. You should think about investing as something that's really logical and try and take emotion out of it. So good job, Richard, so far. Let's continue on and see how he finishes this off.
So I'll just do some closing points to kind of wrap up this video. I've talked about Bitcoin, but this argument could apply to some other cryptocurrencies as well. And Bitcoin may keep going up in price. I honestly hope it does. But at the end of the day, Bitcoin is a high-risk, speculative instrument. And it doesn't make for a strong retirement plan, no matter how much others have earned with it. And even though it's gone up quite a bit, that almost makes it riskier. And, you know, if that intrinsic value is not there to support it, it could fall all the way to the bottom. And I'll leave you with a quote from Warren Buffett. Be fearful when others are greedy, and greedy when others are fearful. And guys, people are pretty greedy about Bitcoin. Just look at the price.
All right. Well, that was a pretty good closing remarks. Obviously, I disagree completely with Richard's conclusion. If you're investing in Bitcoin for the long term, it is not speculative. It is not risky. If you're young, it's actually probably the best retirement plan that you can make for yourself right now. And that's just because it's so obvious that it's going to continue to outperform almost every other asset that you can get your hands on. So totally disagree with him there. That's fine. That said, while the arguments for this video were all built on pretty faulty assumptions and the conclusion was just wrong, I actually like this video a lot. And the thing that I like about it is he's essentially just telling everyone watching that's caught up in the mania to take a step back, breathe, and try to think logically about Bitcoin as an investment. And that's something that I can really get behind. Also, I can tell that the reason why he's making this video in the first place is because he really cares about his audience and he doesn't want them to make any bad financial decisions. And that's something that I really respect. Obviously, I have completely different opinions on him on what's a good investment decision, but I respect the fact that he cares so much about his audience. I care about my audience too. You guys are all awesome and I want you to be as prosperous as possible. Overall, great video. His conclusions about Bitcoin were pretty bad. I would grade those all an F, but his intentions were good. That was an easy A. And his advice about investing rationally, also great advice. A+ advice there. That's it for today, you guys. I really appreciate all of you guys watching. And if you liked it, all I ask is that you like, subscribe, and if you really liked it a lot, share it with a friend that you think would get some value from it. Tell me what you thought about this video in the comments below. I really love hearing all your feedback. It's actually pretty crazy to me how evenly split my audience is in between loving Bitcoin and hating Bitcoin. I think that's really interesting. So definitely leave your perspective below. I want to hear it either way. Anyways, that's it for today. I'll see you guys for the next one. I'm out.